Hi everyone, it's Darren here. I'm just going to do a recap of last week's trades, and if you've been following my trading, you'll know that I've added a low risk to reward version of the strategy I've been trading. I run a 5R version of this, which performs really well, but I wanted to add a low risk to reward one, mainly because I've got a lot of free time, and secondly I wanted to kind of do some live testing to see if there's any advantage using different risk to rewards as a way to diversify my risk. Now I know on paper the idea of running different strategies to act as like some sort of diversification. So when one strategy is not working well, then the other will sort of step in and smooth out your equity curve. I know that works on paper, but I always like to do live tests of these things because I think it always tells us a lot more about execution and management, and you tend to sort of pick up nuances of the strategy that you wouldn't have noticed otherwise. So if you watched the video last week, the idea is to take simple big ideas, combine them together, run it over a long time horizon, and that is your edge. And as I said in the video last week, the idea is to combine long-term momentum, short-term momentum, and a positive risk to reward. So risk to reward wise, I'm targeting 2R. So about as low as you can go on a positive risk to reward. And for long-term momentum, I'm using the 200 period moving average, simple moving average. Prices above go long, prices below go short. For short-term momentum, I'm just looking for longs, 2 consecutive bull closed bars, bullish bars, and then a breakout on the next bar. Okay, so whenever I see 2 consecutive bullish bars, I set a pending to enter at the breakout and a stop below the low of the first of the bullish bars. Then I target 2R, but rather than a fixed take profit, it's a minimum of 2R. So sometimes I'll set an automatic TP, sometimes I'll watch price and try and squeeze a little bit more out of the trades. That's it. It's really very simple strategy, and so simple you think, well, how can it possibly make money? And the reason it makes money is because essentially because markets trend, okay? And with this type of entry, when markets trend, then this type of entry generates a lot of opportunities. Okay, you can see this was on Wednesday, and this was a loss here, and all of these were winners. Okay, so when price is making lower highs and lower lows, classic trend pattern, we generate a lot of entries, and we hit our target with a positive risk to reward. If I jump to Friday, when markets are very sideways, very flat, we only generated 2 entries, so only 2 losses. And in this very sideways stuff here, price tends to go bearish, bullish, bearish, bullish, like so. So the idea is if you get if you get just enough trending periods, the money you make there covers the losses in the flat periods. What is quite nice as well, where price is ranging but with quite a wide range, you tend to pick the tops of the ranges. And you see on this day, this was a +2 win, this was a loss, this was a loss, this was +2, and this one I'd move to break even. So a break-even day here when price is still sideways. It's not perfect trending positions, but you didn't rack up a lot of losses. So that's the 2R system, and it is really simple. And again, if you don't believe that these simple systems have any potential, then you really need to go and look at Raymer's thread, where he has done some extensive testing on these simple ideas. They're difficult ones to take on because our natural human tendencies lead us to believe that you have to be a bit more complex than that, and you need to use some sort of analysis, and really to get ahead in the market, you've got to be kind of on another intellectual level. I see it more as just more of a numbers game and just simple ideas. It relies on the fact that markets do trend, and they trend more often than we expect. You can either take advantage of that by having a very high risk to reward, or like a trailing stop, or you can take advantage by just having a positive risk to reward and having a pattern that generates entries consistently in the trending areas and not too often in the flat areas. It's a simple idea, but it's something that's simple to test, and perhaps something that you should have a look at. So leave me some comments, and I'll keep you updated how things are going with this.